What's up? Welcome to Blockchain Tech and Finance with me, your host, KinToshi. Oh, I don't have all sorts of stuff up here. If you're on the YouTube side, please do subscribe, turn on the bell notifications. Again, right here to Blockchain Tech and Finance. Let's go right on to the slew of news I've got going on for the day. I just want to check the monitor levels, make sure everything's working. I have the chat open. You can go ahead and chat with me. Let me know what type of news you feel is important and what we're covering here. And also, all of these article links are in the description box below on this stream and on the recap videos. What's up? Welcome to Blockchain Tech and Finance with me. Great. Monitor's looking great. Sounds working great. Let's go right on into it. All right. It's the weekend, but I want to cover these articles. So weekend close on the Dow Jones is 0.5%. NASDAQ closed in the red at 0.61, down 0.61%. S&P 500 in the green, 0.22%. Global Dow real time is down 0.38%. Gold continuous contract is up 0.1%. And crude oil is up 0.05%. On the Europe markets, for the close of the week, FTSE 100 closed down 0.36%. The DAX down 1.39%. The CAC 40 down 0.82%. The FTSE MIB down 0.86%. The IBEX 35 down 1.36%. Stock 600 down 0.96%. On the Asia market close for the week, the Asia Dow down 0.79%. The Nikkei 225 on the green 0.31%. Hang Seng Index down 2.01%. Shanghai Composite Index down 0.3%. S&P Sensex is down 0.2%. FTSE Straits Index is up 0.04%. S&P 200 benchmark is down 0.76%. The Kospi Index is down 0.48%. In the Forex, we got the Euro in the green 0.21%. Japanese Yen in the green 0.02%. British Pound in the green 0.02%. The Australia Dollar in the red 0.13%. US dollar index is in the green 0.35%. The WSJ dollar index is in the green 0.25% or 0.24%. In the cryptocurrency markets, we got Bitcoin $21,829 per BTC is in the green 1.33%. Ethereum USD is $1,536 per ETH, up 1.92%. In the rates, we've got the US 10-year Treasury note. No change. Oh, yeah, it's weekend. Let's go into the futures. Crude oil futures in the green, 0.05%. Gold continuous contract, 0.1%. E-mini NASDAQ 100 continuous contract is in the red, 0.03%. E-mini Dow, 0.47% in the green. E-mini S&P 500 future is down 0.01%. And silver continuous contract is down 0.32%. All right, let's go right into our first article in the day here. Now, I'm going to have another stream right after this one, so we're going to kind of plow through this, and I've got another one with, there's going to be 2 back-to-back videos, and then on the Monday, I'll be continuing regular Monday streams. So, top 5 Bitcoin documentaries to add to your watch list. So, if you want to watch some entertainment for yourself, Bitcoin documentaries can serve as a tool for advocacy, helping to promote the adoption and acceptance of Bitcoin and other cryptocurrencies. So Bitcoin documentaries play an important role in educating and informing the public about the cryptocurrency space. They can help demystify complex concepts and technology, making them more accessible to a wider audience. Additionally, documentaries can provide a historical perspective on the development of Bitcoin and the cryptocurrency industry, helping to contextualize current events and trends by highlighting the potential benefits and drawbacks of Bitcoin and other cryptocurrencies. Documentaries can also contribute to public discourse and decision making. All right, they raise awareness to issues, financial inclusion, privacy and security, vital considerations for the future of cryptocurrency space. And furthermore, Bitcoin documentaries can serve as a tool for advocacy, helping to promote the adoption and acceptance of BTC and other cryptocurrencies among individuals, businesses, and governments. And here are 5 documentaries. The Rise and Rise of Bitcoin from 2014. The Rise and Rise of Bitcoin is a 2014 documentary that explores the history and development of Bitcoin and the cryptocurrency industry. The film covers the early days of Bitcoin, including the mysterious creation of the first Bitcoin by the pseudonymous Satoshi Nakamoto and the subsequent emergence of the Bitcoin community. The documentary also features interviews with key figures in the Bitcoin industry. All right, I'm going to keep going here. Let's see. Bitcoin, End of Money as We Know It from 2015. A lot of these can be like partially out of date with a lot of what they're talking about. But good to watch and learn the history, at least. Bitcoin, the End of Money as We Know It, is a 2015 documentary that examines the impact of BTC on the global financial system and the potential implications of the future of money. The film explores the features of Bitcoin that make it different from traditional currency, such as the decentralized nature and the use of blockchain technology. It also looks at the potential of Bitcoin to democratize finance by providing access to financial services to individuals and businesses that are currently unbanked or underbanked. Let's see. Features interviews with experts in the field, including Bitcoin developers, entrepreneurs, and academics who provide insight into the technology, economics, and politics of Bitcoin. Banking on Bitcoin from 2016, documentary film that takes a closer look at the early days of BTC and the people who helped shape its development. So maybe it's a little similar to this. The film covers the creation of Bitcoin and pseudonymous Satoshi Nakamoto. So you might find like kind of some recycled content between these different films. But also it covers the first ever Bitcoin transaction, the first Bitcoin exchange, and the rise and fall of first BTC marketplaces such as the now defunct Mt. Gox. Includes interviews with predominant Bitcoin industry professionals such as business owners, programmers, and investors who offer their perspective on the technology, culture, and future of Bitcoin. It has a comprehensive look at the early days of Bitcoin from its creation and its rise as a global phenomenon. Let's see, Magic Money, the Bitcoin Revolution from 2017. The Bitcoin Revolution is a 2017 documentary film that explores the potential of Bitcoin and other cryptocurrencies to disrupt the traditional financial system. The film looks into the characteristics of Bitcoin that set it apart from other forms of money, namely its decentralized structure and usage of blockchain technology. It discusses both potential advantages such as financial inclusiveness and the ability to avoid conventional financial intermediaries, and disadvantages such as a lack of regulation and the possibility of illicit activity. Examines how investors and corporations in established industries are becoming more interested in Bitcoin and other cryptocurrencies, as well as how governments are becoming more involved in the cryptocurrency industry. Has interviews with experts in the field, including Bitcoin devs, entrepreneurs, and academics who provide insight into technology, economics, and politics of Bitcoin. All right, so it's seemingly kind of like these films are kind of maybe regurgitating some similar aspects of each other, but maybe with some more positive updates and basically like updates year to year, because these are like obviously subsequently year back to back to these films. Cryptopia Bitcoin, Blockchains in the Future of the Internet from 2018. This documentary film examines the potential of blockchain technology and its impact on the future of the internet. The film explores the features of blockchain technology, such as its decentralized nature, security, and transparency, and how it can be used to create new decentralized applications and services. The documentary covers various use cases for blockchain technology, such as cryptocurrency, supply chain management, and voting systems. This will be a good one to watch, especially if you want to learn about voting systems on the blockchain, how it can pioneer and innovate voting, how we vote. It also looks at the potential implications of blockchain technology for industries such as finance, healthcare, and the sharing economy. The film also examines the challenges faced by blockchain technology such as scalability, regulation, and energy consumption. Let's see. The movie concludes discussions and professionals in the industry such as blockchain technologists, business owners, academics, and they offer their perspective on the technology and the potential its potential and the present difficulties. Additionally, it contains videos from conferences, get-togethers, and other occasions that demonstrate the rising popularity of blockchain technology and its potential influence on the future. So that's this. You got some 5 films here. If you want to check out some media during your weekend or into the new weeks or whenever you watch this video, check these out because it's all relevant either which way. And it helps you understand the history like that. All right. Next article we're going to spin up here. How to prevent NFT theft, according to industry professionals. Professionals working in the Web3 space highlighted various tools and best practices to protect NFTs from hackers and scammers. This is from Ezra Reguera. I'm going to say Ezra, writer, reporter for Cointelegraph. So, as non-fungible tokens, NFTs attract more users. They also capture the eyes of scammers. Bad actors in Web3 have set their sights on digital collectibles, with millions being lost through scams and various attacks. However, according to professionals working in the Web3 space, there are multiple ways and tools to prevent being a victim of the NFT theft. In addition, users can also take various actions after losing their digital collectibles to hacks. Co-founder and CEO of security firm Certic told Cointelegraph that the first and most important step is always due diligence. Avoid clicking on suspicious links and be very careful when signing token approvals. Goo shared, or Ju, you, or Goo. Taking a step further, the executives shared other best practices, like periodically checking and revoking unneeded permissions and segregating NFTs into different wallets according to their purpose. He also explained that long-term holds should be kept in secure wallet that interacts minimally, if at all, with applications. Hardware wallets have a somewhat steep learning curve, but the time investment is worth it. Yeah, go for a Ledger. Go for a Ledger cold wallet storage hardware wallet. When asked about what can be done once the asset gets lost, they shared that it's unfortunate, but there's not a lot a user can do to recover the assets. However, NFT marketplaces can blacklist the NFTs so that it cannot be traded anymore. Raising awareness of common scams is an ongoing effort, educating users about the safest ways to transact and how they can minimize their risk is the first step, he added. While hardware wallets may be a great solution, Michael Pierce, the CEO of Web3 security firm Not Common, said that there are still risks involved. He explained that people should buy the hardware directly from the manufacturer to minimize any chance the wallet has been tampered with before the person receives it. Yeah, don't go buying things off eBay or Amazon like that. Buy directly from Ledger themselves. Meanwhile, if the scam or attack has already occurred, Pierce recommended that victims report it to databases like Not Common to help keep others safe and identify the scammer. If the potential losses are significant, the executive urged victims to take legal action if possible. Mohammed Issa, a senior strategist of data firm Chainalysis, also shared some insights on the topic. According to Issa, as NFTs become one of the fastest growing areas in crypto, it's becoming a go-to target for hackers. He explained that NFT transactions are creating a new challenge for cryptocurrency investigation, as decentralized protocols are more complex and very difficult to trace compared to traditional centralized services. Issa also told Cointelegraph about the importance of being proactive when falling victim to theft. While it's very important to report scams and hacks to law enforcement, he believes NFT holders can protect their investment with tools like storyline analysis software created by their firm. So this tool tracks stolen NFT movement. Issa believes that the tool can enable users to assist investigators after being hacked and help them concentrate on the transactions and funds that matter most. BNB Chain Growth Operations Director Alvin Khan also shared that users can use tools like revoke.cash, a way to check wallet status and revoke approvals, and browser extensions that provide risk warnings before signing transactions. With the BNB chain ecosystem, they told Cointelegraph that there are efforts from the community to provide more NFT-specific security tools. The executive talked about an NFT tool that detects NFTs' authenticity called Go Plus, and other chain-wide initiatives like DApp-Bay's Red Alarm and Avengers DAO, which Khan believes can help users stay one step ahead of scammers. He explained that these tools, with the contribution of the ecosystem projects, assess project risk levels in real time and alerts users of potentially risky dApps so that users do not interact with the malicious dApps and contracts. After becoming a victim of a hack or scam, Khan highlighted that it's important to reach out to NFT marketplaces. When all else fails, the executive said that burning the token may be the last resort. Reaching out to the NFT project and asking them to burn the affected or stolen token may be a final solution. So that's that. Here's some ways to prevent NFT theft according to industry professionals. All right, let's keep going here. Cointelegraph, China's Hainan to boost NFT oversight as digital yuan trial ramps. This is from Brian Cornby, writer reporter for Cointelegraph. Hainan's market regulator wants to promote non-fungible tokens as part of the digital economy, but will actively work to weed out bad actors and speculative behavior. Authorities in this province in southern China have vowed to increase oversight on the non-fungible token NFT space to promote the healthy development of the sector and to stomp out fraud and other associated risks. Separately, the People's Bank of China, PBOC, has announced that it is working on new features for its central bank digital currency CBDC pilot program known as the Digital Yuan, or ECNY. NFT oversight. In a public notice posted on January 29th, Hainan's market regulator and 9 other agencies from the province outlined a lengthy plan to tackle the NFT sector moving forward. A translation of the document reveals that the regulator is placing emphasis on promoting NFTs as part of the digital economy, particularly in a way that as a way to attract foreign investment into the free trade port of Hainan. Let me know in the comments how to pronounce that, if possible. The provincial authorities, however, want to oversee the NFT market in a way that restricts market chaos, such as misleading information, speculation, copyright theft, fraud, money laundering, and fictitious value. Some measures include severely cracking down on the false propaganda under current frameworks, such as unfair competition law, preventing copyright infringement by guiding and urging internet platforms to remove such content, and cracking down on fraud. An emphasis has also been placed on educating the public about the risks and laws of the sector so that they purchase cautiously and avoid losses due to wild speculation. The Chinese government has had a unique outlook on the NFT sector since it boomed in popularity. While the asset class has not copped blanket bans like the ones China has imposed on private cryptocurrencies, state agencies have often been quick to deter any sort of speculative behavior. And the digital yuan adds bells and whistles. Meanwhile, according to the announcement shared via Baidu on January 30th, the PBOC plans to add new features to its long-running trials of the digital yuan. The central bank said that it's developing a QR code-based transaction system so that consumers can scan with one code to make CBDC more user-friendly. It emphasized that such integrations will help China realize the interconnection between the digital renminbi system and traditional electronic payment tools. Another touted benefit of the QR code system that merchants will be able to support various transactions while limiting an increase of cost to consumers. The PBOC emphasized that in 2022 it had piloted the CBDC across 17 provinces and rolled out around 30 digital yuan red envelope activities involving airdropping small amounts of the asset to citizens. The campaign was also used to promote the use of the digital yuan, particularly concerning payments for low carbon travel such as public transport. Earlier this month, the eCNY network received a key upgrade via the integration of smart contracts. According to the report from local crypto media outlet 8BTC, smart contract features were launched via the food and retail-focused delivery app from Meituan. When users place an order and pay with their eCNY wallet, a smart contract triggers and searches for keywords and purchase items in their order. If a user buys something on the list of keywords for the day, they go in the draw to win a part of a prize worth around $1,300. So, there it is right here. China to boost NFT oversight as the digital yuan trial ramps. And a lot of other countries are going to have to keep up with these digital innovations. How AI can make the metaverse a more interactive space. This is from Rachel Wolfson, writer-reporter for Cointelegraph. The metaverse will likely impact physical and social interactions with artificial intelligence as a critical factor in this shift. The potential behind the metaverse is becoming greater as virtual and physical worlds converge. Market intelligence firm Contrived Datum Insights recently found that the global metaverse market is estimated to surpass $1.3 trillion by 2030. According to the study, this growth will be driven by newly adopted virtual economy trends combined with the rise of both crypto and online games. Additionally, a recent survey conducted by CoinWire highlighted that the metaverse would likely reshape social lifestyles. CoinWire found that 69% of respondents believe that the metaverse will eventually modify social lifestyles due to new approaches taken for entertainment and activities. AI will make the metaverse more interactive. Kathy Hackle, author of The Metaverse, the Essential Guide for the Business Opportunities of the Web3 Era, told Cointelegraph that the metaverse comprises virtual shared experiences that happen both in virtual spaces and in the physical world. In quote, "It's just that the physical world side of the metaverse equation hasn't been fully enabled. It will come in the next 10 years. If you take that into account, then how we socialize will be deeply impacted by the metaverse." Hackle elaborated that technology such as volumetric video, a technique that offers a more immersive experience by capturing three-dimensional spaces, will likely change how individuals communicate. For example, this may help us feel more present when our loved ones are far away, she said. Hackle added that artificial intelligence AI would help create more interactive metaverse environments moving forward. Although the concept of AI and the metaverse is relatively new, some examples today demonstrate how this may play out. For instance, Sebastian Bourget, a co-founder and chief operating officer of The Sandbox, a popularly decentralized virtual world, told Cointelegraph that over 1 million users played games in The Sandbox last year. Bourget believes that users of The Sandbox have become familiar with using avatars to showcase digital identities, he said. In The Sandbox, users can connect with their digital identity, make friendships that have real emotions through these experiences. It doesn't matter the background, age, or where the users are from. The Sandbox is a global digital nation. With this in mind, Bourget is aware that metaverse platforms have the potential to reshape social lifestyles. 3 billion people are now digitally native. There is no way from that, back from that. The way to interact is now with avatars in social worlds and across social media platforms, he said. While this may be Bourget shared that the sandbox, while this may be, Bourget shared that the sandbox users will eventually be able to incorporate their own physical movements into their digital avatars, resulting in more personalized and realistic characteristics. Bourget explained that the sandbox would partner with Kinetics, a technology startup specializing in AI, to bring emotes and animations and express emotion to video games and virtual worlds. Yassine Tahi, CEO of Kinetics, told Cointelegraph that emotes will allow users to animate avatars through customized dance moves and physical interactions displayed in reality. We have developed a unique AI that allows users to record movements with a phone's camera, which can then be applied to avatars, he said. According to Tahi, emotes are important for recreating social interactions. In the future, people will want to embody the physical world to behave in certain ways in virtual worlds. For instance, if someone falls during a runway show in the physical world, this can be recreated in the metaverse with avatars using emotes. In addition to emotes, using AI to implement voice characteristics may also help deepen interactions with digital worlds. Sabin Dima, CEO of Humans.ai, a layer 1 protocol built on top of Cosmos, told Cointelegraph that AI would play a massive role in the metaverse when creating better user interactions. Humans.ai is the blockchain of AI and is being used to mint super skills and voices that users can apply to avatars within different virtual worlds, he explained. According to Dima, creating a digital voice or allowing avatars to speak in different languages will increase social engagement and improve experiences. To put this into perspective, Dima shared that Humans.ai lets users create digital voices, speak in different languages, and implement synthetic voices that may prevent discrimination. You can enter a Zoom call with a different voice, for instance, which could prevent discrimination if you wish to remain completely anonymous. This will certainly reshape social lifestyles, he said. Moreover, Dima noted that voices are minted as non-fungible tokens to give users true ownership of their voice clips. Yatsi Siu, co-founder of chairman of Animoca Brands, further told Cointelegraph that he believes AI will enhance metaverse experiences. Diana, Humans AI synthetic avatar, is an example of generative technology which can be used for multiple use cases and sources from Humans AI. So this is a metaverse character right there, basically, in AI. One primitive example of this is chatbots. In video games, we constantly engage with non-player characters with rudimentary character development. AI changes this significantly. They will deepen and enhance engagement as well as create deeper meaning and utility to their related ownership of their assets in the metaverse, he said. Will metaverse interactions replace physical encounters? Well, the metaverse has already started demonstrating how people can engage socially in virtual worlds. Incorporating AI within these environments will likely create better engagement, yet it remains questionable if social interactions in the metaverse will eventually replace physical engagements. According to Siu, individuals are already influenced by online experiences. Therefore, he believes that the metaverse will likely create deeper immersion moving forward. Given this, they noted that the metaverse will not replace real-life engagements, but rather enhance these interactions. Dima added that the metaverse, combined with AI capabilities, will result in a digital transformation that could make individuals smarter. AI will allow users to speak in different languages or be present in multiple spaces at the same time, he said. Yet, while virtual worlds powered by AI will likely result in more realistic experiences, Hackle pointed out that the physical world remains a key part of the metaverse. She said, in quote, "The future of the metaverse is about connected experiences that transcend the physical and virtual divide. They will just be experiences. The difference is that experiences will be augmented by this technology, AI." All right, so that's there. How AI can make the metaverse a more interactive space. Let me know your thoughts in the comments about AI and the metaverse and virtual reality. What's your take on it? So, from personal finance in CNBC, the Federal Reserve is likely to hike interest rates again, and what that means for you. Yes, they did. This from January 30th, so I just want to recap this. The key points: the Federal Reserve is widely expected to hike rates by a smaller 1/4 percentage points at this week's policy meeting as inflation starts to ease, which they did. Still, another interest rate increase will make borrowing more expensive, and here's what that means for your wallet. So let's go over this. So basically, it's that they raised the debt ceiling. In the rate hikes, from my understanding, Federal Reserve is widely expected to announce its 8th consecutive rate hike, which happened. Let's see more from the good news is that the worst is over, said Yiming Ma, an assistant finance professor at Columbia University Business School. The U.S. Central Bank is now knee deep in a rate hike cycle that has raised its benchmark rate by 4.25% points in the last year. Although inflation is still above the Fed's 2% long-term target, pricing pressure have come down substantially, and the pace of rate hikes is going to slow, Ma said. Yeah, so, and quotes, the good news is that the worst is over. The goal remains to tame runaway inflation by increasing the cost of borrowing and effectively pump the brakes on the economy. So what it means for you, the Fed rate hikes, the federal funds rate, which is set by the central bank, is the interest rate at which banks borrow and lend to one another, overnight, whether directly or indirectly. Higher Fed rate influence borrowing. Fed rates influence borrowing costs for consumers and, to a lesser extent, the rates they earn on savings accounts. Here's the breakdown of how it works in credit cards. Since most credit cards have variable interest rates, there's a direct connection to the Fed's benchmark. As the federal fund rates rise, the prime rate does. 2. The credit card rates follow suit. Cardholders usually see the impact within a billing cycle or two. After rising at the steepest annual pace ever, the average credit card rate is now 19.9% on average, an all-time high. Along with the Fed's commitment to keep rising its benchmark and combat inflation, credit card annual percentage rates will keep climbing as well. Households are also increasingly leaning on credit card to afford basic necessities, since incomes have not yet kept pace with inflation. This makes it even harder for the number of borrowers to carry a balance from month to month. Credit card balances are rising in the same at the same time credit card rates are at record highs. That's a bad combination, said Greg McBride, chief financial analyst at bankrate.com. If you currently have credit card debt, tap a lower interest rate personal loan or 0% balance transfer card and refrain from putting additional purchases on credit unless you can pay the balance in full at the end of the month, and even set some money aside, McBride advised. And mortgages, although 15 and 30-year mortgages rates are fixed and tied to Treasury yields in the economy, anyone shopping for a new home has lost considerable purchasing power, partly because of inflation and the Fed's policy moves. Despite what will likely be another rate hike from the Fed, mortgage rates could actually remain near where they are over the coming weeks, or even continue to trend down slightly, said Jacob Channel, senior economist for LendingTree. The average rate for a 30-year fixed-rate mortgage currently sits at 6.4%, down from mid-November, and when it peaked at 7.08%. Still, these relatively high rates, combined with persistently high home prices, means that buying a home is still a challenge for many, Channel added. Adjustable rate mortgages are ARMs, and home equity lines of credit, or HELOCs, are pegged to the prime rate at the federal fund. As the federal funds rate rises, the prime rate does as well, and these rates follow suit. Most ARMs adjust once a year, but a HELOC adjusts right away. Already, the average rate for a HELOC is up to 7.65% from 4.11% a year ago. And auto loans, even though the auto loans are fixed, payments are getting bigger because the price for all cars is rising along with the interest rates on new loans. So if you are planning to buy a car, you'll shell out more in the months ahead. The average interest rate on a 5-year new car loan is currently 6.18%, up from 3.96% at the beginning of 2022. Elevated pricing coupled with repeated interest rates increases continue to inflate monthly loan payments. Thomas King, president of the Data and Analytics Division at J.D. Power, said in a statement, car shoppers with higher credit scores may be able to secure better loan terms or look for some used car models for better pricing. In student loans, federal student loan rates are also fixed, so most borrowers won't be affected immediately by a rate hike. The interest rate on federal student loans taken out for the 2022 to 2023 academic year also rose to 4.99%, up from 3.73% last year and 2.75% in 2020 to 2021. Any loans dispersed after July 1st will likely be even higher. Private student loans tend to have a variable rate tied to the LIBOR, prime or treasury bill rates, and that means that as the Fed raises rates, those borrowers will also pay more in interest. How much more, however, will vary within the benchmark. For now, anyone with existing federal education debt will benefit from rates at 0% until the payment pause ends, which the education department expects to happen sometime this year. On savings account, on the upside, the interest rates on some savings accounts are higher after a run of rate hikes. While the Fed has no direct influence on deposit rates, the rates tend to be correlated to change in the target federal funds rate. The savings account rates at some of the largest retail banks, which were near rock bottom during most of the COVID pandemic, are currently up to 0.33% on average, thanks to, in part, to lower overhead expenses. Top yielding online savings account rates are as high as 4.35%, much higher than the average rate from a traditional bank, brick and mortar bank, according to Bankrate. If you are, in quote, if you are shopping around, you are finding the best returns since the great financial crisis. If you are not shopping around, you are still earning next to nothing, McBride said. Yet any money earning less than the rate of inflation loses purchasing power over time, and more households have less set aside in general. The best advice is to pick up a side hustle to bring in some additional income, even if it's just temporary, and pay yourself first with a direct deposit into your savings account, McBride advised. That's how you're going to create a pathway to be able to save. Is that everything? Yeah, that's everything here. So this is that. And Federal Reserve raised the rates. And what it means for you. It's from Yahoo Finance. Why tech stocks have higher interest rates in the morning brief. This is from January 31st from Julie Hyman. This article first appeared in the morning brief in today's newsletter. So let's get some key points here. Tech stocks can't turn around until the Federal Reserve stops raising interest rates, or at least until investors believe the Fed will stop soon. The Nasdaq has bounced this year as investors look ahead to the central bank's pivot away from the higher rates and towards a pause or cut. The anticipation is part of the reason why yields on the benchmark 10-year Treasury note have come down from a high of 4.24% in late October to around 3.5% now. It's also part of the reason why the tech stocks have rebounded. So why are rising interest rates so problematic for tech stocks in the first place? Speaking of in generalities, tech companies are by and large growth companies. To fuel that growth, they rely in part on borrowing money, regardless of whether companies use this money to hire software engineers, produce must-see streaming shows, or make smartphones. When interest rates are low, it's cheaper to borrow more money for more initiatives and grow. At the same time, investors who want high returns are incentivized to invest in growth stocks when rates are low. The logic is that tech stocks are the ultimate long-duration asset, said Interactive Brokers chief strategist Steve Sosnick. During the 2010s, tech stocks were certainly seen as a more attractive investment when parking money in low-risk yielding government debt. Programming note, Sosnick will be joining Yahoo Finance. And the returns followed the NASDAQ 100 and index of the largest tech stocks surged nearly 1,500% between its prior year big bear market low on November 20th, 2008, and its most recent high on November 19, 2021. The S&P 500, a larger, more diversified basket of stocks, rallied by 609% during its bull run from March 9th, 2009 to January 3rd, 2022. The pandemic and ensuing inflation from fiscal stimulus and bottleneck supply chains kickstarted the Fed's quest to raise interest rates, which flipped the prior decade's investing narrative. In 2022, the NASDAQ 100 fell 32%, its worst annual performance since the financial crisis. Jefferies analyst Brent Thill has been examining the link between rates and software stocks, which he covers in particular. Thill sees a clear positive correlation between rates and energy shares, and a negative correlation between rates and shares of software companies. In other words, low rates are good for tech and higher rates are good for energy, which is exactly how 2022 played out for investors. End quote. I think the lingering problem here really is that higher rates must be discounted in the cash flow models used to value tech and aggressive growth stocks, said veteran tech investor Paul Meeks, portfolio manager and Independent Solutions Wealth Management. If rates are high and stay high, then valuations can expand significantly even when fundamentals improve. Meeks also noted that another phenomenon that accompanied low rates, private market valuations ballooned as investors poured money into startups. This also now reversed. Higher rates stop America's innovation engine because they'll continue to hinder venture capital and private equity and credit investments, Meeks argued. This week, tech giants including Amazon, Alphabet, and Apple are due to report
but not everyone's living in it.
To report quarterly results. On Tesla's TSLA earnings call last week, CEO Musk highlighted the effect on his vehicles' affordability given higher rates, saying raising interest rates alone effectively increased the price of our cars in the U.S. by nearly 10%. Investors no doubt will be looking for these companies' views on how interest rates have impacted their plans for future growth. Although with Amazon and Alphabet already announcing job cuts in the tens of thousands, investors certainly have an idea. And yeah, those cuts have gone even farther since this article rolled out in general. So why tech stocks have higher interest rates, from the morning brief on Yahoo Finance. And we're going to close out this stream today with the BBC. Granted that the BBC will let me read this. Let's see what it says. Let's see. All right. In the tech war, Biden moves to halt U.S. exports to Huawei. Huawei, reports say. This is from Monica Miller, writer-reporter for BBC News in Singapore. U.S. government has stopped approving licenses for American firms to export most items to Chinese technology giant Huawei, according to reports. It comes as the Biden administration continues to tighten its rules on exports of U.S. technology to China. Washington has previously accused Huawei of being a threat to U.S. national security and of working with Chinese Communist Party. The company said that the Chinese government have repeatedly denied the allegations. The U.S. Commerce Department has told some American firms that it would no longer issue licenses for U.S. technology exports to Huawei, according to the Financial Times, which first reported the story. The move comes as Washington moves towards a total ban on the sale of U.S. technology to the Chinese telecom equipment giant, the paper said. In quote, working closely with our interagency export controls partners at the Department of Energy, Defense, and State, we continuously assess our policies and regulations and communicate regularly with the external stakeholders. A U.S. Commerce Department spokesperson told CNBC, in quote, we do not comment on conversations with or deliberations about specific companies. They added, Huawei declined to comment on the reports. The Biden administration has continued to tighten restrictions on Huawei as political tensions between Washington and Beijing increase over Taiwan, where most of the world's computer chips are made. In October, U.S. Undersecretary of Commerce for Industry and Security Alan Estevez said, the threat environment is always changing. We are appropriately doing everything in our power to protect our national security and prevent sensitive technologies with military applications from being acquired by the People's Republic of China military, intelligence, and security services, he added. For several years, the Shenzhen-based Huawei has faced U.S. export restrictions on items for high-speed fifth-generation 5G telecoms equipment and artificial intelligence technology. In 2019, during the presidency of Donald Trump, U.S. officials added the company is also called company to a so-called entity list. It means that U.S. companies need to obtain a license from the government to export or transfer some technologies, especially over concerns that they will be used by the Chinese military. However, in that time, licenses have been granted to some U.S. companies, including Intel and Qualcomm, to supply Huawei with technology that was not related to 5G. All right, so you got some related things here as well on topics of Huawei, 5G, semiconductors, and China-U.S. relations. All right, more on the story. U.S. is beating China in the battle for chips, how the U.S.-China chip war is playing out, and Asia chipmakers shares slide after U.S. curbs on China. All right, so this is tech war. Biden moves to halt U.S. exports to Huawei, reports say. So that's all I've got for the day. If you're on the YouTube side, please do subscribe, turn on the bell notifications. Again, right here to Blockchain Tech and Finance. And I'll see you in the next video I've got coming up here. Leave your comments. And again, all these articles are in the description box below. Cheers, ciao, peace be with you. Stay safe.